What's up everybody? Welcome to the Stocks channel. My name is Cory and today we're going to do technical analysis on the stock market. So first up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today's SPY was down 0.45% and volatility is officially back to the market with the VIX closing above 17 today. So intraday you can see we started out bullish and we were pushing out above the 20 daily moving average, which was that break above 451, and then started to get some impulsive selling and started to break down below the support at 448. And as you can see with the close, we closed at a lower low, so it looks like we're well on our way towards that gap fill at 443. Now, bigger picture, keep in mind this is the possibility is to come down here towards the gap fill and then start pushing higher towards the gap fill at the higher prices above 455. With today's price action, it's hard to believe that we won't go a little bit lower. And I'm not saying that gap definitely has to fill. It's possible we stop just above that gap and then start pushing higher and then still come down here and fill this gap at a later date. But there is a good probability chance we will fill the gap and find support right around that rising 50 EMA. And we also have support at that level because it's the breakout above 442, which was the high from June 15th. So there is going to be a ton of support at that level between 442 and 444. So there is a good chance that is going to be our higher low within this bull trend as we continue to push higher towards 460. Now, there is always going to be the possibility we don't hold that support, and in a bearish scenario, we slice through it, and then we'll likely start heading down towards 430, and that means we're likely going to see a full-blown correction in the month of August. Now, there is no reason to believe that's going to happen, so objectively, we are going to need to see this support fail right around 442 to 443, and then if the support fails, we will be expecting to see 430. It's a lot simpler to make the price action prove it because a lot of bears have got the market wrong all year long because they're expecting a correction or they're expecting lower prices, but they completely forget that price action has to break these levels and physically start heading lower. So don't make that mistake of assuming we're going lower, make the price action prove it. And right now the price action is proving it wants to come down towards 443. Now, in the event we don't close the gap at 443, there is one more scenario where we go fill the gap at 455 first, put in a lower high, and then come down and fill the gap at 443. So don't rule out the possibility we could go higher and lower. That's why you need to manage your risk right here around the level at 448. And if you're shorting the market and we start breaking above 448, then you're looking for the possibility we're going to 455. So right now, the best risk level to use is still right here at 448, and above or below that level tells you whether we're going to 443 or 455. So manage your risk at that level or just sit on the sidelines and wait till there's more clarity in the price action, because it does get a little tricky when price action is sitting between two open gaps. On the NASDAQ 100 triple Qs, we were down 0.47% today, and just like SPY, at one point we were starting to break above the rising 20 daily moving average, and it did look like we were going to get that bull breakout and fill the gap above 380, but as you can see from the daily candle, we were rejected and we closed near the low of the day, and we closed just above yesterday's low, which was that level right around 372. Now in the triple Qs, there is significant support between 372 all the way down to about 368. This is a very strong support zone, which means there's no reason to believe that we're just going to slice right through it. And as you can see from the daily Bollinger Band, we are not even able to go much lower without being significantly below that Bollinger Band. So there are going to be bears out there saying that we're going to crash straight down towards 355, and I don't think that's going to be the case. I think there's a good chance, if anything, we fill this gap right around 368 or start to bounce from this retest right around 370 and actually start heading back higher towards the gap fill above 380. So I'm just not seeing a lot of the bearish narratives, and this mostly looks like a bull flag, and you can draw this out very clearly that if you just draw from the highs to the lows, this still looks like a very sideways, lazy downtrending channel, which is indicative of a bull flag after an impulse higher. So don't get overly bearish quite yet. We still need to break down through some critical support below. And then if we break through all of that support and we start to put in these lower highs and lower lows, then we're going to start getting a lot more bearish on this market. And that could mean we're going back down towards 355. But again, don't assume it's going to happen. Make the price action prove it, and right now I would wait for that breakdown below 370. If you're shorting the market, manage your risk from the resistance at 375, because if we break above that resistance, you're looking for higher prices like the gap fill above 380. On the Dow Jones, we were down 0.38% today, and the Dow Jones is doing exactly what I started to draw out last night, which was because of the close below 353 for 2 days in a row. It likely meant we were coming down to fill the gap at 350 and test that support at the rising 20 daily moving average to put in our higher low before we started towards the higher high at 360. So I'm not changing a thing about this prediction. It's working out very well. So in the Dow Jones, watch that support at 350. And as long as we don't break down below it, you instantly get more bullish above 353 if we bounce from 350, and then you're looking for the price target at 360. Now on the way there, don't forget we do have a resistance right around 356, but I do think if we bounce from 350 and break through 353, we're likely going straight to 360, which is going to be right around the middle of August. So as I continue to warn you, I would not be getting overly bearish until these obvious support levels break down, and then you can start looking for lower highs and lower lows, and you can manage your risk from shorting at resistance levels, but this is still a bull trend until these critical support levels are lost. On the Russell 2000 IWM ETF, we were down 0.2% today, and you could see the Russell is sitting right on top of the rising 20 daily moving average, and we did get another rejection below 195, which could mean we are coming down towards the gap fill at 190. So what that would look like in the Russell is we're coming down towards the gap fill at 190 and then looking for the higher prices as we find support at the gap fill and the rising 50 EMA. And the reason we're looking for that is because we're in a bull trend and the lower Bollinger Band is starting to squeeze, so we're not looking for a lot of downside at this point in time. Now, if we start to bounce immediately, you're instantly getting more bullish off of the 20 daily moving average of support on the break back above 195 with resistance levels above at 198 and 201. On the ARKK ETF, we were down 1.75% today, and just like with the Dow Jones, a lot of the prediction of how I drew out the arrows is playing out, and we are now at the critical test of the breakout of the bear market resistance, which is this retest between 45 and 46. So if we start to bounce from here, which it looks like we will because the Bollinger Band is squeezing right on top of the 50 EMA, I'm looking for a strong bounce off of 45 back up towards the gap fill below 49, and then the break of 50.7 to confirm the higher low into the higher high, and that will confirm the ARKK ETF is going back into a bull market and the bear market is over. That doesn't guarantee it's going to happen, and yes, it is possible we continue to break down and form lower highs and lower lows. So I'm not saying the bullish scenario is the only possibility. What I'm telling you is there's a clear risk level at 45, and it's more likely that we're going to bounce and continue into the bull trend because we have such a powerful bull trend breaking out of the bear market resistance. So watch that level very closely, and if we bounce from it, you can instantly get more bullish. On the VIX, we were up 7.28% today, and at one point the VIX was trying to crush back down below 15 and then spiked outside the upper Bollinger Band yet again. So I still think there's a good chance the VIX is going to crush back down towards that gap fill, and I do think that is going to go hand in hand with the higher low into the higher high. So my analysis on the VIX is very similar to my analysis on the indices. I think we can only go a little bit higher before you're going to see significant VIX crush, and that is going to fuel the next rally to the higher high in the indices from the higher low bounce off support. On Bitcoin, we're currently trading right around 29,000, and we're not getting bullish until we can clear above this resistance right around 30,000 to 31,000, and it likely means we could head back down towards support at 28,000 before we find any significant buyers. That's where we found the buyers last time outside the lower Bollinger Band, so just be a little more cautious while we're trading below 30,000. On Tesla stock, we were down 2.11%, and Tesla is still getting rejected from these negatively sloping moving averages, but still above the rising 50 EMA. So if you want to get bullish, you're still managing your risk right there at 250. Below 250, we fill the gap at 235, and I'm suggesting to wait until we break above 270 to 274 before getting bullish. Above 274, I'll be looking for that price target above the gap fill at 289. On Apple stock, we were down 4.8% today on a high volume sell-off after earnings, and Apple now has a gap to fill way up here at 190.69, and we're sitting right on top of support at 182, way outside the lower Bollinger Band. So anytime a market moving stock like Apple is getting a huge sell-off like this is something you need to be aware of, because this stock without a doubt moves the entire market. And if it's going through a huge correction, that is going to put a lot of downward pressure on the indices. Now, the good news for the bulls is that Amazon reported earnings and was up over 8%, which helped offset some of the losses from Apple. But overall, Apple is the market moving stock we want to pay attention to. So watch this critical risk level right here at 182 with resistance at 185 and the 50 EMA right around 186. And if we can start to bounce and break back within those Bollinger Bands, then we can start to look for a bullish trade towards the gap fill above 190. So manage your risk right here at 182, and do understand we are very oversold outside the lower Bollinger Band, which is likely at least good for a dead cat bounce. So jumping back over the S&P 500, this is definitely a reversal candle you want to pay attention to, but keep in mind we are sitting right above some very critical support levels, which could still be higher lows within a bull trend. It's very important you remember that, and don't rule out the bullish scenarios, because the majority of people losing money this year in the market are not giving enough significance to the bullish scenarios, and those are the scenarios that continue to play out. So keep in mind the bullish scenario is that we bounce from a higher low, and we're getting very close to where we're going to do that from. So you need price action to break through those critical support levels before you start getting more bearish and start to favor the bearish scenarios. I still favor the bullish scenario because we're still in bull trends, but I'm instantly going to get more bearish if we lose those critical support levels, and that is the definition of not having a bias and letting the price action do all the talking. So check your bias at the door and follow the chart and know your critical levels and manage your risk from those critical levels, and make sure your trade plan is prepared for either scenario. If you want to come crush this market, consider joining Bank Trade Alerts or the Stocks Channel Discord server, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.